Welcome back to Curious Commerce, Capital Budgeting, Session 3rd. Let us begin with a simple question. Where should a company invest its money? A company earns profit, collects funds, but the real challenge starts after that. What should they do with that money? Should they open a new branch or buy new machinery or start a new product line? Now, here is the important point. All investments are not the same. Each investment has a different purpose, different risk, and different return. So, we need a proper way to classify them. That is what we are going to learn today. In real life, companies never have just one option, they always have multiple choices. For example, a company may think, should we expand production? Should we replace the old machines? Should we try a new business? Each option solves a different problems. Expansion leads to increased sales. Replacement of machinery leads to reducing the cost. If the company opt for the diversification through the new business, sometimes it reduces risk, sometimes it increases the risk. So the decision depends on the type of investment. That is why understanding the situation is important. The question is, why do we need classifications? Because all investments are different. If we treat all investments in the same way, we may take wrong decisions. For example, expansion decision is about the growth, but the replacement decisions is about the efficiency. Both cannot be evaluated in the same way. So classification helps to understand the purpose clearly, to choose the correct method, take better decisions. In simple words, classifications gives the clarity. Now let us see the main type of the investment decisions. There are four types of the decisions. First one is the expansion decision. Second one is the replacement decision. Third one is diversification decisions. Fourth one is the modernization decisions. Each type of answers a different business needs. We will now understand each one in detail. Expansion decisions are taken when a company wants to grow. It means increasing production, entering the new market. For example, if a company is doing well in one city, it may open a new branch in another city, or a factory may increase the production capacity. The goal is simple, more sales leads to more profit. But there is a risk also. New market may not respond well, so expansion decisions must be taken carefully. Replacement decisions are about the replacing the old assets. Over time, machines become slow, inefficient, and costly to maintain. So companies replace them like the old machines consume the high electricity and it takes the frequent repairs. That's why the companies that replace the old machine with the new machine automatically the efficiency of the machine is more and the cost per unit is also less. So replacement helps to reduce the cost and improve the efficiency. It is not about the growth, it is about the improving existing performance in the market. Diversification means entering a new business area. For example, a company making cloths starts a food business. Why do companies do this? To reduce risk. Because if one business fails, another business can support. But diversification is risky because it is a new field. Company may not have experience, so it requires careful planning. Modernization means upgrading technology. For example, changing from manual work to automated machines. But why is this needed? Because the competition is increasing. Companies must improve the productivity, improve the quality, and as well as to reduce the time. Modernization helps the company stay competitive in the market. From a manager's point of view, the decision is not simple. They must think which type of investment is suitable. What is the risk involved? What return can we expect? For example, if the goal is growth, it leads to expansion. If the goal is cost saving, out for the replacement. So managers must match the investment type with the business goals. Let us quickly revise. Different investments serve the different purposes. Expansion for the growth, replacement for the efficiency, diversification for the risk reduction, and the modernization for the competitiveness. So classification helps in better decision making. Thank you all. In the next video, we will learn about capital budgeting versus working capital. This will help you understand two important concepts clearly. Stay connected with Curious Commerce. Follow Curious Commerce Financial Management Hub in WhatsApp channel to know the updated information about the commerce and economics. And follow Curious Commerce YouTube channel to learn the real business secrets. Thank you all.